The sharpest cut is definitely coming through for the Hong Kong market.
Pulses are also higher. So really there is a protein inflation element.
TCS misses the mark on revenues and margins in Q4.
Inflation numbers have come off, but not enough to kind of signal a clear way forward.
The signs of a slowdown were there, but we were anticipating a bounce back. That did not come through.
Goldman Sachs has actually initiated coverage on two stocks, Eicher Motors and Ashok Leyland. Nifty is down about 30 odd points, the sensex is down 140 points.
Interesting, you've listened to the Fed speakers this week, even they are kind of divided.
We have now 5 price blocks for ONGC.
RBI has approved the reappointment of the MD and CEO Sanjay Agarwal.
Suddenly, in the last 10 minutes, markets have fallen close to about 30-40 points.
Pulling up banks and other lenders for instances of overcharging borrowers.
Mid-caps relatively faring better, so the mid-cap index is flat. Good afternoon. That was the day so far. Hello and welcome to Closing Bell live from the CNBC-TV18 Motilal Oswal studio. I'm Reema Tendulkar. With me is Surabhi Upadhyay, and we've got Nigel D'Souza, not in the newsroom but here in the studio. Hi, Nigel.
It's a pre-weekend special with Nigel in the house.
Well, that's right. We just got 55 minutes and then it's our long weekend that we're looking forward to.
Almost.
Till 3:30, we'll track markets. Post that. I know who's the party girl. The party girl is out there. But it's a good session, guys. I mean, we were down earlier in the session, but a good recovery.
Absolutely. I was preparing to say that, if it wasn't for the technology names, markets would have been in the green for the 9th consecutive day. But looking at the way the markets are recovering right now, 70, 80 points from the day's low, it looks like we might just end up in the green by the end of it. Look at that intraday chart. The low today was hit sometime around 12:15, and since then, it's been a one-way up move, getting towards the 17,800 mark right now. Banks are leading from the front. So the Nifty Bank is now piled on 350 points in terms of gains. And it's individual names like Kotak Mahindra Bank, ICICI Bank, Axis Bank, they've all moved to the high point of the day. Big moves coming through in these banking names. IT continues to sulk and trade after TCS missed the mark on revenues and margins. Across the board, you are seeing a sell-off in IT names. And IT in itself, that contribution plate, I think we got that up. Pull it up once again and you would see the IT names, TCS, Infi, HCL Tech, are shaving off close to about 40 to 50 points off from the Nifty. But even those stocks are now seeing an intraday pullback. So pull up an intraday chart of an HCL Tech or Tech Mahindra and you would see an upward sloping move.
Well, that's right.
Boy.
Well, that's right. The intraday low is around 17,713. Yeah. We went out there a couple of hours ago and we've seen a good recovery of close to around 80 points, as you mentioned. The Nifty Bank, that's the one that's showing strength, and that's offsetting all the negative work that's been done by these tech names. So the Nifty Bank, well, it's gaining good momentum, and now it's crossed yet another technical barrier. That's closer around the 100 DMA, which we were tracking earlier today, of around 41,710. So we're 200 points higher than those levels, and the Nifty Bank is the one that's helping the Nifty move ahead. On the Nifty, well, we have expiry that will be playing out in the next 55 minutes or so, since it's weekly expiry. And I've picked up 2 strikes to track today. One is a 17,800 call. At the start of today, the premium was closer to around 50 rupees. So senses there is some writing being seen out there. You add around 40-50 rupees to around the 17,800 odd mark. That's telling you 17,840, 17,850. That's a bit of a resistance zone. On the downside though, 17,750 put, that's seeing some writing. Even when we went to the low point of the day, well, we did see that, there was no unwinding out there. So the sense is that that recent low, that's today's low of around 17,730 to 17,750 should hold out. So you've got your broad range out there. Let's bring it up for you on the screen. That's the range you're working with. If in case we breach this range on either side, we could easily see a 50-60 point move in either which direction. So let's see how this goes. But for the time being, it appears we're in that band of around 100 points out, Surabhi.
Absolutely, but this is something that you can't really, ignore, the kind of pullback that we've seen from the lows, because it's not happened on the back of any major global move. There's a little positivity on US futures right now, and let's pull up some of the European markets. There's mild negative over there, because remember, the market right now in this pullback has managed to overcome 2 lows or 2 negatives, so to speak. One obviously is the disappointment from TCS, and the second is the Federal Reserve minutes showing that the Fed seems convinced there's a recession coming, but the market's kind of moved on completely above that. That's the European market. The futures right now are just mildly positive. 0.2% or so higher. Interesting move considering that we're not trading tomorrow and the rest of the world is. So it seems that we are preempting what could be perhaps the Wall Street action overnight. The mid-cap market is a little subdued. That's the only thing that's missing in this pullback. That wide move that we saw yesterday, it's not as apparent today, though the mid-cap index is now trying to come back in positive territory. The advanced decline ratio is just even, Steven, mildly positive, you can say. About 1,500 stocks on the advancing side, around 1,300 on the declining side. That's a small cap index also trying to bounce in positive territory. So market breadth is not as great as yesterday, but the fact that we have pulled back from the lows definitely telling us the market's mindset, the mood is buy the dip. And I think that is what has really changed in the last 8 or 9 trading sessions from a sell on rally. Today is telling you this is a buy on dips market, at least as of now.
Okay, that's quite apparent in the way the markets have moved over the last 8 trading sessions. We're getting some import-export data for the month of March, so we'll try and analyze that as well. Here's what we have for you on the show today. After IT bellwether TCS, Infosys will be reporting numbers today. The stock is under pressure. We'll get you the key expectations.
Apollo Hospitals is the top Nifty gainer. The stock is 10% away from its 52-week high. So what is powering this move? We'll tell you in just a bit.
AU Small Finance is surging in trade after the Reserve Bank approves the extension of the tenure of MD and CEO. What are brokerages saying? Details lined up.
We will discuss top sectoral ideas in the market setup.